Hello, everybody! Welcome back to the RationalInvestor.com's weekend fun. This is our broiler chicken show. Looks like we're live on YouTube, so that's good to see. I'll put that on mute. I see there's a few people over on YouTube. I have no idea if any YouTubers are going to turn up here. But I do see we have a few people in the lounge, and keep in mind I really do like to speak to the level oneers through this weekend show, kind of a dovetail to Grim's awesome session, and I absolutely love Grim. He's so much more patient than I am. I mean, for anybody who's in the level 2 program, I kind of bitched at the level 2ers during class because they're, and you're probably a little bit shocked because Grim is so patient and he's so understanding with all of you guys. But, I wanted to start off. I did get some feedback that I was a little bit overwhelmed there. I think our level 2 class went for like the better part of 3 hours there on Friday, and I was getting a little stressed at the end of it. But nonetheless, it's all good. All good in the hood. Hope you level 2ers are rocking it now. Lots of powerful information that we are imparting on you guys. Trend lines, horizontal support and resistance, all that kind of fun stuff we just did. And now you guys are into moving averages. So I saw you guys chatting away in the level 2 program, asking for scripts and TRI's little cloud script that one of our students wrote. So I was super excited about that. The level oneers that just got going, well, actually not just got going there, I guess in there about the 3rd or 4th week. I am hearing a little bit of feedback here. So if you have joined the Hangout, probably best to throw yourself on mute. I think Frog, I don't mean to be, oh, there you go. Way to go, Frog. Anyway, level oneers, we're doing fundamental analysis week, huge module. I mean, how are you supposed to tackle a concept that basically is like 100 years in the making in 1 week? But hopefully you guys weren't too overwhelmed with the course material, but at least we've got you thinking along those lines. What does value look like in the crypto space, specifically for those people that are interested in crypto? Really, try and wrap your head around if it's purely a commodity asset, what is the cost of production? Because that's really what's going to sort of set your base for your asset price. And actually, it was interesting. One gentleman that we have in the level 1 program, Tony, he came up with a really interesting cost of production model on Bitcoin. And according to his math right now, and of course, obviously this is all open to interpretation, but his model, it was really interesting. I'll just cut and paste this. Don't necessarily need to give him out in particular. I don't even know where I should put this, but maybe we'll just throw it right on the Bitcoin chart here. Where would be the best place to put this, I wonder? Why don't we put it up here? He had a model, and keep in mind, like I said, this is open to interpretation. If anything, this is a great opportunity for the better put away all this stuff, the YouTube audience, to give us your feedback. But this gentleman's here, his cost of production model goes something like this, which I thought was really interesting. So his math goes something along the lines of takes current top SHA-256 miner approximately 520 days at current difficulty to mine 0.1 Bitcoin, assuming 10 cents per kilowatt hour. That's $5.04 a day. So 520 times 4.04 equals 2620, or approximate cost of production. I thought that was kind of cool. So thank you for helping your fellow students, Tony. Totally appreciate that. And I can see, Tony, that you're a little bit more advanced. than a lot of your brethren. So if anything, I think I'd really like to see you act as a bit of a mentor for the rest of your level oneers, because it seems to me that that you've got a pretty solid head on your shoulders. I don't know whether that's an accurate forecast. You know, obviously, how much is your electrical costs? That is definitely an issue. People are saying no sound over there on YouTube. Can you? Anybody else on YouTube? Can you help a GUI? Are you hearing sound over there? I'm not quite sure. James says he hears. You're in the lounge here, over on YouTube as well. So it must be just you, GUI, because others are telling me that they can hear. So, you know, ironically enough, you know, the way that I actually, yeah, okay, you guys are okay. All right. So the way I actually figure cost of production is I actually like to listen to people who actually say what their cost of production is. Actually, I'm going to turn the fan down just a moment. I'll be right back. And I know he's a bit of a character, and you know, you obviously have to take everything that the gentleman says with a huge grain of salt. Yeah, you know where I'm going with this, eh, Rocker? Rocker says, all right, what the hell is McAfee saying these days? But I remember back in 2017, when through the summer of 2017, Bitcoin was only like $2,000 or $3,000 at that point. I mean, really, it was only a couple grand. I mean, it went up absolutely parabolic there into the end of its move, which is very typical of the end of all moves. But he publicly came out and said that his cost to produce Bitcoins was $1,000. And, you know, ironically enough, I actually think that he inflated that number a little bit, that his cost of production was actually a little bit lower. But if we use those kind of metrics, and I like to listen to industry people who actually mine, you know, that was a year or two ago. We're coming obviously into having events in the relatively near future. Is interesting, like I said, Tony, he came up with a model that gives him a cost of production $2,600. I think on balance, you know, it kind of makes sense, you know, why Bitcoin sort of bottomed here in the low 3,000s from just a cost of production. We're starting to get down into the neighborhood where the miners really are just not going to make any money. And of course, they've invested a lot of money in their production. I mean, I've seen some of these farms are just insane. And my hunch is that people that had cost of production $5,000+ they all got flushed out of the market. So the point that I'm trying to make here is for the level oneers going through their fundamental analysis module this week. I understand it's a very thick week. You know, if you are thinking about fundamental analysis within crypto, I think you absolutely have to start with, you know, what does it actually cost to keep these networks going, right? And if it's a proof of work kind of concept, then we're talking about what do the miners actually get paid to validate the network. I think that's really the key concept. I haven't quite, to be honest with you, I haven't quite figured out what a value metric is on a proof of stake coin. And, you know, this, you know, in those kind of models, this is where things like where are the insiders long? Where, you know, is the smart money positioned on these names? That'll give you sort of an ultimate sort of floor for value in these names. Interestingly, though, we've actually had, you know, the crypto market wash itself out quite dramatically here. And I'm actually starting to see a lot of bases come in here on not only the big names, and usually the big names bottom first. And I think that's exactly what happened here this cycle. But I'm seeing a lot of bottom starting coming in on a lot of the altcoins as well. So we must be getting near some sort of value metrics. And, you know, I give this as sort of a challenge to everybody. Let's try and figure out a fundamental analysis formula, model, for cryptocurrencies. I don't think it's been done yet. I see lots of banter and a lot of speculation, but I don't see anybody who's actually come up with, okay, the fundamental value of one Bitcoin is this, plus that, minus this, plus that. There are lots of little anecdotal sort of pieces, and we've sort of talked about this recently on broadcasts and stuff. Things like this is a very popular metric that painted tops back in like 2017. And then through last summer, the top through 6,000, this NVT study, which I find fascinating. I mean, clearly you can see it's flashing warning cautions here as the Bitcoin prices rally dramatically. This could also come into our fundamental analysis equation, if you will. So this is an ongoing debate with regard to crypto, no doubt about it. I love to do it. Now, the poor guy, I mean, I keep calling him out, but frankly speaking, I think just an absolutely fabulous person within the space. Good old Dav. When he was going through the module and the course, I gave a challenge to him. And really all students, can you come up with a screener that just sort of, builds sort of a score for your coin or your idea? And this was the model that he actually put together when he was a student. And I love it so much. It's such a simple example, and yet I think it's very pertinent. Of how Dav sort of goes through the process of, okay, how am I actually going to rate these ideas fundamentally? So, level oneers, this is the kind of thinking that I want you moving towards. I do know that, and we talked about it in the group one group tutorial session. Some of the ideas that we put on the books are maybe a bit fundamentally questionable. And of course, ironically enough, the biggest sort of drawback of that, especially when you have, listed on one exchange, oh God, we're going through just a total pain in the butt with Trex coins and delistings and all that. So in a weird sort of way, if you go through one of these fundamentally sound checklist kind of concepts before you go risking your hard-earned money, it can actually save you a lot of headaches down the road. So also consider that too. Does that mean that your asset, if it's a total piece of crap, doesn't meet any of the fundamental criteria? Can it be pumped? Sure. I mean, this is an incredibly speculative market. Highly open to manipulation, and so in a weird sort of way, as a sort of old gnarly crude oil trader, I will never bill myself as a crypto expert. And in a weird sort of way, I the little demonstration portfolio that I did, taking $500 and ramping it up into the hundreds of thousands, I just simply wanted to own everything. And it's fascinating to watch, as we owned everything and the whole damn market went zooming up there. Obviously, the value of the portfolio went up. But because we own everything, as we go through sort of the washout phase and all the fundamentally questionable names start getting delisted and just sort of die on the vine, we're having to watch a lot of those names just basically disappear, which is, it's a sad commentary. But please understand, when I built out that Nanny Nibbles, we own like 300 different cryptocurrencies. I just simply wanted to own everything. And basically I've done that. But, especially, if you consider yourself a rational investor, do yourself a favor and build out just a nice little fundamental model. And really, especially a message for the level oneers and, level twoers who just finished their level one. Now they're moving on. Take some time now while the market is trying to find a floor and really ask yourself, what does value look like in the crypto space? Can I get long these names from where the insiders are long? Where's Vitalik long ETH? Right? Now that might be an interesting question. Like McAfee, when McAfee tells you that his cost of production is $1,000. I might, give that a bit of a margin of error, considering he is an interesting character unto himself. But he's trying to give you a framework to work with within this crypto space. I'm not going to sugarcoat it. Trying to figure out fundamental value on these cryptocurrencies, it's a challenge, no doubt about it. But one thing, I remember the Z coins when they started coming out, and one of the stories, I can't remember one in particular, but they actually came out and said that they were raising money privately at $11 a coin. And then the coin came out to market and it zipped up to like $200-300 a coin. And it was blatantly obvious that we were nowhere near value. So anyway, I think I'll probably leave that, little tidbit for the level oneers here this morning. And that, of course, I really want you level oneers to be concentrating on things like, especially when it comes to things like stocks. And I thought I had the screen up here. Let's see, is it around here somewhere? It's one of these pages. One of these pages is not. Oh, you know what? It's over here. There it is. Oh, it's in the same. Oh, fudge. Oh well. Let's see if I can do this. I want you really concentrating on, especially if we're thinking about stock markets, because remember, stocks really don't have any intrinsic value. So we really want to concentrate on where the insiders are long, where the smart money is long. And if anything, what I want you to do through this period, well, mind you, we're going to be moving on to introduction to technical analysis soon. But, like things with crypto, try and figure out, is crypto just purely a commodity story? Does it have a growth component? If it is purely a store of value story, what does supply and demand look like? Cost of production is basically your base for commodities. If you're thinking stocks, then what we really need to think about is, is there actual value in the names? Super, super important. How do you define value in stock market? Things like shares for debt news is an excellent metric for like venture capital, because somebody who is actually owed money by the company, if they look at the balance sheet and they say, you know what, I'll forgive the debt in lieu of these new shares, that is a huge sign of value. And then, of course, insider transactions. If we see insiders loading up on the stock, who best to know the prospects for the company going forward? Obviously, the insiders of the company. So, like sites like, and I was just trying to show you, but I think I screwed it up here. But if we go, well, I'll just do it here. FinViz. If you want, and I think it's a good exercise for all level oneers to do this. But, sites like FinViz, they actually have screeners. And I tried to show this to you guys, in the class, but I'll just sort of demonstrate it. You can actually come in on sites like FinViz and just ask, can I see signs of heavy insider participation? So, this FinViz, it will tell you insiders transactions. And I just happened in the class, I just happened to pull up this one. It just happened to be the top of the list. I'm not really commenting on this particular company. But when you scroll down to the bottom, you can see, well, it looks like this William Irby is buying, right? He's trying to buy more and buy more. So obviously, like half of our job is not to reinvent the wheel. It's just simply just to ride the coattails of the people who are already in the space. Joshua here in the lounge has actually just given me a cool little link, Guru Focus. And this is all about insider transaction from Jamie. So, there are ways for us to find insider transactions and insider information. TMX Money, this is the site that I use for Canadian stocks. They do a great little piece on, well, not a piece, but they have really cool stock screeners. Where are we here? Stock screeners. And you can actually go and ask things like options to directors, shares for debt, and stuff like that. So there are different tools out there to screen for this. Thank you, Joshua. Totally appreciate that. He said that he got that from Jamie. I think Jamie isn't he coming on the Daily Brief tomorrow and doing a fundamental analysis, macro top-down fundamental analysis review tomorrow, isn't he? I seem to remember that. So level oneers, be sure to tune in to tomorrow's Daily Brief because Jamie, who's over in the UK, he loves top-down fundamental analysis, and I think about once a month, once every few weeks, he comes on and does like an overview of, what's the damage Brexit is doing and all that kind of stuff to the fundamental story. So, okay, really what I wanted to do here today is, I suppose we have to say this. Please, if you like the video, hit the like button. There's a little bell. I don't know whether I can show you this or not. Hit the like button. It looks like a few people like this video, so that's kind of cool. As well, I think if you hit this little bell button, it I don't know whether that's the follow button or whatever. I'm supposed to say this, right? Smash the like button, hit the we love you button, all that kind of fun stuff. But if you do like the video, please do all the fun Google things that you're supposed to do on social media. I just got back from vacation. Do you like dividend aristocrats own on margin? Oh boy, there's a open-ended question. I think you're gonna have to be a little bit more specific there, David. Okay, I got to get my head on straight here. So we talked about the YouTube hit, like, smash, all that kind of fun stuff. Usually, what I like to do through these broiler chicken shows is also go through sort of the Twitter feed that I do. But it's weird, since I've come back from vacation. I don't mean to be rude, but I don't know. I've kind of lost my interest in tweeting and doing social media and stuff. It's weird when you sort of take a break from all this social media. You kind of fall out of the loop, and so as a result, I haven't really been tweeting all that much. I think just very quickly, before I left on the vacation, I was, posting some comments about things like stock market seasonality. Really over probably the next 3 or 4 weeks, I'm not really going to be that interested in the long side of the stock market. I do think that crypto, to a certain degree, is very much a risk asset, just like the stock market. So they do, in my opinion, they're actually, I think, highly correlated. I'm actually not really looking for a heck of a lot of performance out of the stock market until seasonally. Usually what we find happens is the market's soft through June. There are parts of the world that actually have their year end, their fiscal year ends through June, like Australia, if I'm not mistaken. Their tax loss selling window is through the end of June here. So, and then of course, in the classic commodity space, there's an old expression that says sell in May and walk away. And that actually was derived from the copper business back when, especially, through sort of the latter part of the 19th century, early part of the 20th century, when a massive economic construction boom was going on here in North America. And a lot of the housing industry, of course, especially back then, you couldn't really do a lot of construction in the winter time. when the ground was frozen. You can do more projects nowadays in the wintertime, but the cost to do the construction projects in the wintertime is much, much higher. So as a result, a lot of sort of like housing industry and stuff like that is very dependent on weather. And so what ends up happening, and you can also think about it in the summer driving season, same sort of thing, is as industry is sort of getting ready for that seasonally friendly window, whether it be construction, building houses, whether it be, the unleaded gasoline industry, people driving more through the summer on vacations. Wholesalers build up their inventories through the winter and the early spring. And then there's sort of an official disconnect. Wholesalers have everything that they need to sell to retail. And so as a result, the demand for a lot of these commodities just falls right off. And the old expression is, of course, sell in May and walk away. And interesting enough, that actually got its start in the copper industry. So the point that I'm trying to make here is that and it's interesting, this year, literally the stock market topped right on the 1st of May. And I had put out tweets and stuff saying, is this top really going to be this cliche? And it turns out that, yeah, actually the top was extremely cliche. Of course, interestingly enough, seasonality, technically speaking, I think we could make an argument 50% rules, bottom of value, lots of gaps to be filled in. We basically went straight up here. There's lots of signs of divergence up top here. Market was overbought, blah, 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 blah. You can see the very well-defined M that came in on price. And seasonally, basically, the market topped exactly when it was supposed to. If we look at this market now, you can see that, it's interesting when you listen to sort of the talking heads, of course. Now we're in free fall. Oh, the end of the world, sky's falling, blah, 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 blah. When really, this really isn't anything out of the ordinary. So very normal. I've been sort of counseling on the site, bottom of value, 38.2 is really important level. I was taught years ago by an old gnarly, I think he used to trade on the COMEX, but I can't remember exactly. But I think he was also on the New York Stock Exchange. But he runs an education program. That's right, Mr. Barbecue. Although I don't think he would take kindly to us calling him Mr. Barbecue. But a gentleman, very, very smart gentleman. And interestingly enough, he actually teaches a course on trading. And he doesn't even look at price charts in his course. All he does in his course is just talk to you about what is it going to take to actually succeed at this thing called trading, and that's sort of setting yourself up for success, knowing exactly what it is you're getting into, building a plan, understanding what type of risk manager you are, blah, 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 blah. And hopefully everybody here at TRI goes, gee whiz, that sounds something along the lines of what Brian tried to teach me in eating our vegetables. But anyway, the point of the matter here is that Ray was super big fan of 38.2s, and really we can't even really call this a bear until this 38.2 has been tested and we actually have bearish resolution through that. So ironically enough, this is still very much a bull. We're just simply asking whether we've actually topped out. And it's interesting how the market has a very beautifully well-defined AB equals CD harmonic that's basically just going to take us into that level. So you may find that we hit this level in some big orgy of selling. And of course, everybody's like, oh, sky's falling, capitalism's over. And the irony of it all, of course, is that's when the public is going to be dumping everything and panicking. And then the market goes and rallies right back up top. What I would say, though, is, historically, what I've found personally is that you can almost set your watch to the market pivoting through this July 4th weekend. I don't know whether it's the Americans go on the weekend and then, of course, they get all nostalgic and they're all rah capitalism. They come back from the weekend and they're like, buy. And they just buy up everything. I don't know whether it's part of that or not. You could also argue, too, that we're in kind of a bit of a vacuum with regard to sort of fundamental drivers and what's driving the market right now. Well, certain politicians are hell bent on bringing this economy to its knees. But anyway, that's here to there. But tariff news, all that kind of stuff. Closing borders and all that kind of stuff. Not really company specific, but sort of sets the tone for trade. Once we hit this end of June, first week of July, then we actually get back into the news that is actually driving these stocks. Because keep in mind, this is basically, the irony of this is you could actually say, do you trade the stock market or do you trade a market of stocks? So this kind of thinking that we're out of June and into early July, we're back to trading a market of stocks where individual stock earnings reports start coming in. And the first 2 weeks of July is the reporting season for the second quarter earnings. So that sort of changes the conversation on Wall Street, and it sort of breaks this sort of seasonal malaise. So not really looking for a heck of a lot out of stocks until that event. And interestingly enough, I would make the argument that crypto, to a certain degree, is kind of, it's going to be affected by this conversation. The ultimate question for a lot of crypto enthusiasts is Bitcoin the ultimate sort of flight to safety kind of proxy? I think the jury's still out on that. But when we look at the Bitcoin chart and the Ethereum chart, I'm seeing a lot of similarities. So, all right. So with regard to the broader market, not really looking for a heck of a lot. And I'm still looking for a probe against 38.2s. Maybe we dip all the way down to 50%. If the market really falls out of bed here, you can actually see there are cheeky little gaps all the way down here at like 2,500 here on the S&Ps. And keep in mind, this is a futures market. So, futures markets don't like to have these gaps left unfilled. My hunch, for whatever it's worth, is we find some sort of footing 38.2, have our counter trend rally, maybe even come right back up to the old highs through the latter part of the summer. And then if there is a quote unquote crash or a serious correction this fall, this gap right here is actually your little marker of where to sort of think where this sort of panic selling might run into some buyers. And also too, we look at the profile, you can sort of see profile's very empty down here, but there's a funny little notch right here that could easily get some attention. And those buyers that are sitting there waiting to buy that level, they'll basically fill in that notch. But as it stands right now, high confidence that we'll find some sort of short-term support somewhere between sort of this 26 and 2,700 here on ES. And I think that'll develop over the next and ironically enough, that's going to literally be like the next month. We've just started June. So not really expecting a heck of a lot out of the stock market through that. If anything, feeling a little bit better because when I go to the gas station today and fill up my car, things should be a little bit cheaper for us. But I've often talked about how energy is often a great leading indicator for the market. You can see this inverted head and shoulders took us right up into reload short zones, and basically the smart money took advantage of that counter trend rally and strapped on shorts or maybe liquidated longs. And here we are heading back down. So it's interesting how this 38.2 just off of this range, we tagged that level, had just a very quick little bounce, and then continued our way lower. Does the stock market have to look like that? It could, very possible. I like to use the energy market as a leading indicator. I think we're probably going to find some key support down here. You can sort of see it on the profile. And this tail looks very interesting as a trade location. So let's see how Monday, Tuesday, especially Wednesday, London kill zone. Let's see how this crude market acts into that level. Really important leading indicator there for us. I could also argue too that crypto and tech and all that, to a certain degree, they'll actually catch a bit of a bid here because it's a long conversation, but energy is a big cost for business. So if energy prices are coming back down, that means that businesses can invest more in technology. So we'll see how that goes. Interesting on the site in our daily briefs and stuff, we're talking more and more about getting interested again in the gold and silver markets. Interesting how we are trying to paint very wide bases here. And believe it or not, I actually could see the gold market actually enjoy a bit of a rally here. So some of the gold names that I'm interested in, I've been nibbling away. Alio was one that I'm interested in. New Carlin is a VCIM name. A couple little juniors in Toronto I'm interested in. Good share structure. So level oneers, when we talk about fundamentally sound names, VCIM, all that kind of stuff, we should probably kick around some of those gold names that I've been accumulating here and sort of walk through that fundamental screener there for you on those. All right, so that's sort of the broader market. Don't really want to get too much into that. Primarily, and really, I want to keep these videos. I actually have an appointment here in a couple hours I have to get to. So what I really wanted to do today was actually just go through, and where's the best way to do this? I wanted to go through some charts that I put out on Twitter and just try and explain them, and then I'll just leave it at that for today. All right, so we had some pretty, 1 hour bots came in. And I don't know whether I posted them or not on Twitter. Geez, I guess maybe that was the middle of last week. But we had like 1 hour objectives hit on Bitcoin. Bitcoin. That was this move here up into 9,000. And at this point, it was sort of like, okay, are we getting maybe a little too ahead of ourselves at $9,000? Keep in mind, we rallied off of 3,000. That's like a threefold increase in a very, very short period of time. So the question ultimately was, this objective was hit, and quite often at harmonic levels, you kind of want to take profits and just sort of let the dust settle. And I sort of was putting tweets out to that effect. Where the hell's the damn Twitter? There it is. I don't know what this is. Let's see. Was that? No, that was all about yield curve. Let's see where I can show that. So I actually, and as you're going through those crazy ass blow off tops, what's really interesting was sort of this was the AB, CD, took us up into that 9,000. Did we need to pause? I found it fascinating that this 4 hour bot, and this is a massive one, and I don't know whether a lot of people are really going to be able to trade this, because you got to buy at 7,900 and risk to 7,000. $900 a coin. I don't know whether you're going to be able to do those kind of trades on leverage, right? That's just huge. But what I did find really interesting about this 4 hour bot, like we said, 1 hour bots, like the traders trade, they, lower time frame swing day traders, those objectives were hit. But this massive bot, and I mean, this is huge. Like I said, $900 risk on a trade. Wow. It's still working away. And after we hit this lower time frame objective, the question was, all right, well, do we work our way up to this bot objective, which is basically $10,000? Huge numbers. I don't know whether maybe this is too far too fast, but one thing I did notice which really interested me was that the point of control, or what we call the POC, was basically this bot level. So if the market had come back down, and keep in mind, this is basically where all the smart money is either long or short. Now, in this particular case, my hunch is long. If they lose this POC, then it basically means that they're underwater. And I noticed that that also happened to be the bot's entry level for its trade. On the 50% of this move, bot traders should just simply move their stop to scratch. And if we do come back down to this 25 level, you just walk away at scratch and say, all right, well, that trade didn't work, didn't lose any money. So in essence, I'm just going to walk away and sit on the sidelines. Keep this reference level in mind, because what we saw happen here after this level was hit, we came down and we tested that, but we never did lose the POC here, which I found fascinating. So that's sort of what I was leaving off, and I sort of was even tweeting out kind of stuff like, gee whiz, $10,000 on Bitcoin actually isn't unrealistic. And you can see I forgot to put the chart there, and that's what this was. Was sort of like, oops, how could you tell I was back from vacation? I forgot to put the chart in the tweet. Great guy. I love Aaron. Aaron, these are the kind of people that actually I love about crypto. Such a good person. He's funny too. I like to follow Aaron. Crypto Optimus. As I go through this Twitter feed, I'll point out people that I follow and that I think are really good. You've heard me talk lots about that Not So Fast guy. I think Aaron is an absolute stand-up guy, and if I was going to actually rely on somebody to listen to in the crypto space, I would definitely listen to Aaron. But at the same time, too, he's not going to blow smoke up your butt. He doesn't have a huge amount of following. A lot of tweets and stuff that he put out is about his family, and he used to have a boat and stuff. And but anyway, long and short of it here, that's what that tweet and reply was all about. Just an absolutely fabulous guy. And I think he was one of the principals in the charity coins, which makes sense, right? And he has a movement that he calls random acts of kindness, which I think is just beautiful. It just speaks to the guy is just an absolutely beautiful human. But anyway, that's just sort of explaining what I was doing there. Interesting to see these Twitter OGs. We're starting to talk about how maybe Bitcoin dominance will cool down and the altcoins are going to have a nice little rally window. I got to say that I actually agree with that sort of thinking, right? Like, you've seen me post these, and literally you guys have all walked through as we were going through sort of the winter, as each and every one of these slowly turned the corner. And it's interesting how just even before I left on vacation, I had said if I was going to take a shot and buy against the lows on anyone, I would probably take a real good look at this Ripple. And sure enough, big gold pop. And now that one is just now starting to flash bullish signals on the moving averages as well. And this is sort of like the little bit sort of like medium, the big boys, Bitcoin, Litecoin, Ethereum. You can see how long ago Bitcoin's, moving average signal now is. That's like a good couple months old. And of course, we talked lots back in the winter time. I remember specifically saying, we're going to have a TRI meetup here in Vancouver this summer. And I had suggested to everybody use Litecoin's rally because they have a halvening event, a big fundamental event coming up here. Use this rally to finance your trip to Vancouver because I think it's going to rally. And sure enough, boom, big rally. I would consider these a little bit more senior. It's interesting how Tron actually was the very first one to actually turn back up here. That's a daily chart. Let's go back to the weekly. Tron was like one of the first coins to actually turn back up. And it turned back up there in like January, February, ahead of Bitcoin, ahead of Litecoin, everything. And you can see how Tron is just slowly put in this really wide W. And now it has an absolute, keep in mind, this is a weekly price chart, right? It has a massive bot setup working away. And you can see they're actually getting pretty close to hitting their profit objectives on that trade. I mean, just fabulous little tool, this moving average identification system. So, with regard to this tweet, it's weird. You can kind of see the market is sort of moving down the food chain. And I distinctly remember in recent sort of YouTube videos, all that kind of stuff. Somebody was like, all right, so that means, Brian, remember when I did that video with Dav, I said that I from a risk reward perspective, Bitcoin and Litecoin had already moved away from their W's. And I said, I really like the risk reward on Ethereum. And then I did like a YouTube video a week or so ago, and somebody's like, all right, so that means all in on Ethereum. And that's not the case, because you can see where the W is. It's way down here at $160. So sitting at $260, we're not anywhere near that W. But what I noticed, and this is really cool, because one of our site members sort of built a fundamentally acceptable altcoin list. And I like to follow these indexes that we built and we track on TRI. And it's interesting how, there's Bitcoin, and it sort of led the charge. You can see this would be like Litecoin and Ethereum and that EOS and Dash and all them starting to come alive here. And here is Joshua's fundamentally acceptable list, sort of, a little bit lower than the big sort of name brand list. And I mean, you can just see it here. It's not rocket science. He's got like ZRX, Dash, XMR, XEM, BNT, REP, GNT, ZEC, PIVX, ADA, right? And you can see that they're slowly trying to turn back up here. And then the bottom one is like the crap, right? And you can see that the crap is actually starting to pop here a little bit. No signs of real W's yet on the crap. But I do like the constructive nature that I'm seeing out of Joshua's list. So I actually went and just pulled up a list of, okay, what did Joshua's coins look like? And hopefully you guys can see that we're just now in the process of putting in these weekly W's, and the moving average is starting to cross bullishly here. So, interesting with regard to this tweet, it doesn't surprise me that the sort of Twitter OGs are thinking, okay, maybe Bitcoin's, has to calm down here a little bit. And we might see the dominance pull back, and we might see the altcoins actually enjoy a friendly market. And also considering too that seasonally, this is the time of year when altcoins have their sort of good time. This should last until somewhere around August, September. So really, it doesn't surprise me to see that. Now, this was an interesting tweet. And, I'm not going to, please don't interpret this as being rude, but I don't do these tweets to get a feedback from the people that follow me. I mean, please don't interpret that as being rude. And the last thing in the world I need is for someone to criticize my opinions. Keep in mind that what you see on Twitter is just my opinion. And this is stuff that I've been working on for 20, 30 years. There was one gentleman in here who's like starting to get into, well, I think you got that wrong, and I don't think this is right, and how can you say these kind of things? If that's how you feel, then just don't follow me. I don't care. I won't be insulted. I really won't. But at the same time, too, if you don't know TRI and you don't understand, things like the fear-greed cycle, then I'm not going to get into a big debate with you as to whether you like my analysis or not. So there was one gentleman who was like, well, if you can't take a little bit of criticism, then you shouldn't be on Twitter. And I just simply said, all right, banned, blocked, goodbye. I mean, I don't need the criticism. It doesn't do anything for me. I'm not in this for ego. I don't need positive affirmations from people. This is just purely what's on my mind. And I find it fascinating because keep in mind, for everybody that did the TRI program, basically this is my bread and butter about fear and greed cycles and how gold, in my opinion, in the silver market in my opinion, were basically the last generation's speculative fear asset, don't like dollars, don't like central banks, want to do everything possible to get out of the fiat system, and they all ran into gold during their fear cycle apex, which was like 1980, 81. 1979, really, you could argue 1980, all in that area. And I made the argument all along here that crypto was this generation's fear asset cycle proxy. And I just find it absolutely fascinating how, basically Bitcoin, and if we do like an overlay of silver and like things like Ethereum, the similarities are just, they're shocking how ridiculously similar it is. Now, this is just my opinion. You don't have to buy my newsletter. I'm not going to be insulted if you don't agree with my opinion. But being critical of me and criticizing me, that's just going to get you banned. It's just going to get you blocked. Because frankly speaking, I mean, I love you guys to death. You're awesome. But you're not really going to get this old dog to change his message. Having said that, I've been watching the way that gold came down off of its insane rally peak. And I've been watching how crypto has basically done very similar price pattern. Yes, I do understand that the time frame reference is different. I don't know how this correlates over time, but I do find it fascinating how there was basically a dead cat bounce in the gold market right back to 38.2s. And remember our conversation just a moment ago about Ray Burchett and his insistence that 38.2 has to both be tested to actually determine whether the previous trend has finished or not, but also ultimately its resolution will tell you the direction of the asset going forward. So in gold's case, yes, dead cat bounce right back into 38.2s. And then it ultimately, it actually did a little bit of a pullback and then a rally. And this is what I find really interesting is the market actually rallied up and took out these highs. And then on the other side of it, just collapsed and basically rolled over. This is what I'm worried about in the crypto space. This bothers me because I got to tell you, through this rally again, 38.2s, we can't really call this a new bull market until this 38.2 has been resolved. And usually what has to end up happening is we rally up, then we mess around with 38.2. If we pull back, form a W, and move through it, then we can start calling new bull markets. But what I'm worried about here, and especially with the incredibly overt bullishness that the public has gotten about crypto here, I'm worried that this might be a trap here, people. Again, this is just my opinion. Doesn't mean that it's going to come to pass. But this is guy working in the market 20, 30 years. What do I see? I actually like the idea. Remember, and I find it interesting that, when this thing, when this particular index, where the hell is it? It's not that one. It should be this one. Nope. This one. Yeah. When Bitcoin was up at 5,000-6,000 last summer, and this thing was flashing warning signs, not really that many people wanted to pay attention to it. And then, of course, Bitcoin 17,000 flashing warning signs. This thing is flashing major warning signs here. Are we going to listen to this, or are we just going to say, well, you know what, this time it's different. It doesn't apply here now. I don't know. I mean, but very simply put, this should be a major caution for all of us. And then also, too, I'd have to ask, just on balance, do assets triple? I mean, what's the time frame that this asset actually took to triple, right? Our sort of breakout was here. I mean, we're talking like, Whoops, that's not what I wanted. Date. And really, why don't we take it there, right? That's probably our first official breakout signal. 14 weeks. So what is that? That's like, actually, I'm actually surprised that's a lot longer than I thought. But that was basically from February into May. And gee whiz, what are we supposed to do when it starts snowing? Buy when it snows, sell when it goes? I mean, gee whiz, that almost looks like a perfect seasonal rally. Is that maybe a little too far, too fast? Even through these moves, I don't think we had this kind of appreciation in price that quick. This is a pretty damn quick move for an asset to triple in a matter of a few months. You know, there is that 38.2 off of Stamp staring us at the face at 9,400. And it's interesting, too, this high to low trend line drawn off of this high and that low also suggests resistance right here, 38.2, 50% in that area as well. And then if we look at value, you can see that now we're actually getting above value. Uh-oh. You know, there's a guy that I used to work with years ago, John Hoagland. Anytime market got above value, he was getting ready to short this thing. I'm thinking, you know, especially off of sort of things like the weekly charts, it's a little bit too early for us to actually talk shorts. What I'm really thinking is, you know, especially over the short term, I think that pullbacks are buying opportunities. Let's see if I can find the damn chart I wanted to look at. Where was I? Maybe it was off of the Twitter feed. Yeah, I'm actually thinking that we could actually very easily have one of these kind of events right here. It doesn't necessarily mean that the bull's over, and we might actually even rally right back up to new highs. But I could very easily see us in this kind of environment. So be careful here, people. You know, I hate to say it, but, you know, I've started to talk to you guys at length about this. We are coming very late to the Bitcoin bull buying up here. You can see where the weekly W is. That's about 4,300. And, you know, going back to that gold chart, what I wouldn't be surprised to see, and it wouldn't surprise me one bit, is we, you know, do our seasonally summer happy sort of, this is a good market, right? Then we roll over into the end of the year, and I don't know whether you guys have been around crypto that long, but usually, especially things like Ethereum, oh my goodness, they get really beat up through the end of the year. You know, maybe the regulators down in the States, you know, one of our site members is gotten very interested in any of you guys here in the lounge. Do you remember what Thomas is going on about it? It's FYT financial blah blah blah, something like that. They're really starting to get serious about clamping down on crypto, reporting and regulation and all that kind of stuff. Maybe that kind of crap hits the fan. I don't know. But I wouldn't be surprised if there is a swim against these lows again. Just as sort of like your ultimate FU move, just to wash out the public and the weak hands. And it was interesting to see in the gold market. I'm a big fan of 78.6s. In this particular case, we actually had to go down, take out those lows, and then the bottom ultimately comes in off of that 78.6. I've seen that happen so many times. And ironically enough, you know, if we do that same sort of logic with Bitcoin, if we, you know, swim against those lows, just see if we can, you know, flush out any final weak hands. And then the market actually, you know, puts in the bottom and ultimately pivots off of 78.6. Notice how, gee whiz, that's actually going to be relatively close to where the previous bottom was put in. That, you know, if I was to think about sort of a keep you honest, you know, let's not get, you know, FOMO sucked into the emotion of trade. If I was to think of a perfect scenario for painting a bottom, this is what I'm thinking. Doesn't mean it's going to happen. It's just purely Brian's opinion. So I wanted to speak on that. So let's talk a little bit about price charts here in the short term, which I think I did a little bit more up here. You know, and I sort of painted it down here. I've been talking, if you followed me at all on Twitter and YouTube pages and stuff, probably the most accurate predictor of recession out there. And keep in mind, we're very, very late in this economic cycle. But one of the most accurate predictors of recession is what's called the yield curve. And in this particular case, the orange is basically the short-term T-bill, Fed funds kind of idea. The green is 2 years. The blue is 5 years. This orange, the thin line, is 10 years. And this red line is the 30 years. So this is the yield curve. So in essence, 2 years, 5 years, and 10-year yields are now actually below what the short-term interest rate set by the central bankers is. The 30-year still has a ways to go. But this is interesting. I posted this on like May 23rd. If we go and look at what's going on in that yield curve right now, we see that that is closing really fast. So here's that relationship now as of Friday's close. And look how these yields are just collapsing. So the Fed funds rate, short-term interest rate, sitting at about 2.3, 2.25, whatever. 30 years only sitting at 2.58. So now we're talking basically about 20 basis points separates the curve from being quote unquote normal versus being inverted. And you know, I've done this. Go back and watch previous Broiler Chickens shows. I've done this at length. I won't go into too much depth here today, but the long and short of it here, dot-com boom, inverted yield curve, in essence, long end, shorter than, you know, in this particular case, 2 years. Dot-com boom, then once this inverted message is flashed, look out, and boom, stock market craps out. Then George Bush Jr.'s housing market, I think I went inverted right here. Short-term interest rates higher than longer terms. Within 6 months, boom. So, you know, I mean, you can see how far this stock market has run. And really, it's just a question of, you know, like when the economy is weak and they want to prop the economy up, you can see the yield curve is nice and healthy. Financial services guaranteed to make money. But we're not in that kind of environment now, right? You can see here we are basically now. The profit margins for the financial services industry are getting squeezed. There is the short end. Long end is still higher, so we're still normal, right? And then, of course, if we look at this, right, there is that 30-year. There is the short term. In essence, when this 30-year starts dipping below this level here, that's when we know we've got basically about 6 months before this whole damn party ends. And what I'm concerned about here, and I don't think people in crypto really understand this, crypto has not been through a recession yet. We don't know how crypto is going to act through a recession. I don't think, you know, I remember through the dot-com boom, you know, all of these people said, this time it's different, this time it's different. And you know, like at one point, there was one stock in Canada that the stock, it was called Nortel Networks. The one stock, the one company represented 35% of the entire Canadian equity market. One company, 35%. That's pretty crazy. So that company went out of business by 2005, 2006, 2007. Gone. History. Anybody invested in that? Gone. So I'm not saying crypto is going to go that road. I just don't know. But what I do know is that during recessions, that literally means the economy is contracting. It's shrinking. Growth proxies get their asses kicked because growth means they're expecting things to grow. And if the economy contracts, that's the exact opposite of growth. So I think it's important that the community appreciate that there is a really big unknown that we know is coming. Now, the interesting thing about crypto, and I don't know, maybe people don't see this, but, is 300% growth, and this has just happened to be over like a 3 or 4 month period, is that natural? Is it? No, that is incorrect. Giant Set Town, that is incorrect, right? Bitcoin was started in like, when did the white paper get published? Isn't it 2011? Was it 2008? Was it that long ago? I thought it was 2011. But okay, so maybe okay, I'm gonna back up from that. That is incorrect. But I'm gonna say, all right, it got its start in that, but that's the bottom. And it was after the crisis, right? I actually, I used to write a blog. The sell signal in the stock market, it actually came in March of 2007. So what I'm worried about, right, is that, like stock market, we're just now approaching these big honking, weekly sell signals. In fact, actually it'd be really interesting. Let's do a weekly chart. Let's just see what the moving averages are telling us. Okay, so stock market wise, moving averages are still sitting bullishly. They're not in crisis mode. If we go back to like 2007, 2008, I think we're in very similar like this kind of pattern here. And if we start rolling over and start emming out with the moving averages negative, that's the exact opposite of what we just saw, right? That's what I'm talking about, is what does Bitcoin do during this, like sort of like from here to here? What does Bitcoin do in this kind of environment? And I don't think Bitcoin and crypto has been through this kind of environment yet. So I don't know. It's a huge, huge unknown. I still think that, the interesting thing is as we go through sort of the summer, I actually think that, like I had sort of showed you on that gold comparison, I don't think today is the sell signal, right? And if anything, what I used to tell people, especially when I was a broker, I used to say, look, usually Brian's early. Brian's usually right, but he's usually early. So I kind of think we're in this kind of phase right now where there could be sharp pullbacks, but at the same time too, I think that the market could actually go up, maybe even kiss like 10,000, 11,000. And a lot of people in the public are going to go, see, Beamish, you were wrong. You don't know what the fuck you're talking about, right? We're making new highs, man, right? And then I go, yeah, I guess you were right. And then market craps out. Man, I've seen that so many times. It's ridiculous. So, I just have to ask, is 300% growth in like 3 or 4 months, is that realistic? Is that even, is that sustainable? I don't know. That's a big if. Then, of course, at the beginning of this conversation here today, we were talking about McAfee saying his cost of production is $1,000. Let's assume that really his cost was double that. I don't know, 2,000. One of our level oneers came up with a formula I showed you on the screen of cost of production. This formula here, 2,600. Maybe I think this is a bit aggressive, but nonetheless, maybe it's accurate. And we go through the halving event, which is in a year or two, right? So that puts the cost of production at $5,000. Okay. Like the interesting thing is, like, if the bottom here is at $4,000, and let's just, let's assume that Bitcoin has just an absolutely insane growth rate and it grows at 30% a year, right? Well, let's say $5,000 times 0.3. All right, that's $1,500. So actually, why don't we do 1.3? 5,000 times 1.3. So now we're at 6,500 times 1.3. So now we're at 8,400 times 1.3. Right now we're at 10,000, 11,000 times 1.3. Right? Whoops, I did something wrong there. Not 13, 1.3. So times 1.3. All right, now we're at 14,000. How many years have we gone by now? Right, we're 1, 2, 3, 4. Did I do that wrong? 4, 5 years. We're now 5 years from now. Times 1.3. Now we're 6 years. So 6 years from now, we're just now, and that's assuming a 30% annualized growth rate for this asset through recessions. So, and we're just now starting to get up. Let's do it again. Times 1.3. Okay, now we're finally getting up to new all-time highs. Now we're like, what, 6 years, 7 years down the road, right? I don't know whether we can actually, that kind of growth rate is sustainable. My hunch it isn't. But the point of the matter here is that, I would be, if I wanted to invest in Bitcoin, I would be hunting, value, cost of production. And you can see how wild my little sort of forecast is here. I have a hard time making fundamental case of value at even now 8,000. Down here at 3,000-4,000, I suppose so. It's getting into that neighborhood of value. And then, of course, technically speaking, nice W's. Brian, he loves his weekly W's. So down here, okay. But up here, oh, geez, now we're getting nosebleedy. And here comes Mr. Burchett sitting at 9,400. So for those people that are interested in investing in Bitcoin, be careful here, people. If anything, what I do like is I do like people that are working stink bids down below. And actually, I heard a really crazy story. I think it was one of the Canadian exchanges. They had like a flash crash where Bitcoin prices went down to like, what was it? Like it was a couple $100 or something like that. And just absolute fell out of bed. And of course, that speaks to illiquidity of markets and all that kind of stuff. So be cognizant of that. We're coming very, very late to this rally. I do like the idea of back and forth. And if anything, off of the lower time frames, I'm actually thinking, we've hit upside objectives and we're consolidating, and maybe we're going to get ready for another leg higher, but maybe let's get to that conversation now. Okay, so a little talk about the yield curve and my sort of prognostications for the similarities between Bitcoin and the gold market. It's interesting, actually. Like the only thing I said about this tweet was, wow, eerily similar. And wow, I was actually quite shocked at how the one gentleman in particular, he almost wanted to like have a fist fight with me over this. And I'm just like, I don't need these headaches. Goodbye. So anyway, let's move on. And, this is sort of why I really like doing the TRI site. One of our site members found this, and, this is funny, but definitely parental discretion advised. If you have children in the room, they're watching this, don't click on this link. But really, really funny. Somebody did like an overview of trading with Elmo. All right. So getting to sort of current market state. And actually, I did it both on Ethereum here and on Bitcoin. I really do think that this isn't a bad little roadmap. I noticed that when the market sort of does top out and we start getting flashes of things like divergences and momentum rolling over and stuff, that the market seems to like to correct about 30-35 bars or so. Yeah, well, good point, Matt. That says the Canadian markets have been very illiquid since Quadriga nonsense. So I noticed that after this sort of rally off the bottom, we had to take a month or so and clean up that. Then we had this rally here. We had to take a month or so and clean that up. This one was kind of an interesting one because it was sort of mid-move, but in essence, we had basically parabolic move into there, then just a whole bunch of sideways, choppy, drive you crazy, and then the market started to really trend higher in earnest about a month or so. Not really the best analogy, but nonetheless, hopefully you can see the sideways action that took about a month to play out, and then we went back into bull mode. So we had this big run up, and what I'm really worried about is on this sort of flash break, and it was this flash break, and it was really interesting. Another sort of great sales pitch, if you will, for being a site member. One of our OGs on the site actually found a high correlation with this flash crash sort of scenario that we saw on Bitcoin and the CME futures expiry, and how they were basically manipulating the price so that the futures would close at a very specific level. We do quite a bit of research on the site about options expiry and how stock markets are heavily manipulated into those derivative expiry events. And we're seeing a lot of similarities between what happens in the derivatives markets, in the stock market, and around options expiry, and what they're doing to Bitcoin on the CME contract around its expiry. It's actually quite shocking, the correlation. So, if you aren't familiar with TRI, I think we have a 7-day trial that you can sign up for. And you can watch the daily briefs and stuff. And Thomas talks lots about that. He's going to be keeping a close eye on this study going forward. We just had a big CME contract expiry. And our conjecture around the site was how much of this dump here was directly related to that. It's interesting. Like, I like to use the 13-period EMA as sort of a check of the overall trend. And I got to say, I was really impressed with one site member who saw that, of course, this huge wick up top here. Keep in mind, there's a whole bunch of trap bulls there that would like nothing more than to get out of their positions up top here. He saw the 13 EMA check, and if we go down to drill down to lower time frames, you actually see that there were like divergences and stuff that started to build, and like Davo bullish signals that started to come in on this event, as well as I had sort of said off of that 4-hour. This was nothing more than just a POC check. He actually went in and said, man, the 13 EMA check, I got to go buy this, looking for a revisit of this wick, at the very least, this candle body high here. And as soon as we get into that wick, that'll release all those trap bulls, and they get sort of released. And he figured that the odds are that we go up and eat this wick up top here were pretty high. So I can't remember the person in particular who said that. They were in the lounge. Keep in mind, the lounge is extremely busy. We got people coming and going all the time. But hats off to you. I was very, very impressed with your thinking there. I was very, very impressed. Ballsy, because in essence it means stepping into the breach when the market is absolutely unhappy and dumping. But that 13 EMA check, I think actually that was a half decent trade location. So I was exceedingly impressed with that trade. Nonetheless, as you can sort of see here, off the higher time frames, I'm getting a little concerned. We hadn't seen this the whole way up here, right? We actually now have, on that flash crash event, we actually have a bearish divergence in our MACD histogram confirmed. We haven't, like I said, we hadn't seen that the whole way up. So that's got to be a big warning sign. As well, I have my overbought, oversold indicator, was very comfortably in the overbought zone. And anytime we get a bearish divergence with the market overbought, we have to start thinking about L tangonators. And I can understand that we're a little bit early, like I had said off that weekly chart a few minutes ago. I think we're a little bit early to be hunting shorts. So, yes, I do like the fact that we're getting warning signs that things are getting awfully tired here. If I'm actually thinking short, and this is the chart that we've been throwing around the site all weekend long, if I'm thinking short, then I'd like to see something like this develop. As I said, the gentleman who stepped into the breach and bought against this 13 EMA tag, extremely impressed, right? There is that POC test. So hats off to you. Lower time frame trade. Great trade. I was very impressed with that. And you can see the end result. He looks like he's pretty happy. Notice we've come into that wick now, and notice all those trap bulls that are in that wick, they're now finally getting their release. Whew, whew. And notice how we're just sort of sitting right at that candle body high right now. Anytime we probe into that wick, all those trap bulls are like, oh, thank God, sell, 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 get me the hell out of here, right? I find that fascinating. But anyway,